tax filing dates have changed due to the whole COVID-19 coronavirus pandemic. April 15th as your filing and first quarter ending has now changed.
It's recommended that they pay quarterly estimated tax payments. So normally those quarterly estimated tax payments, essentially what it's doing is it's breaking up what you owe at the end of the year into 4 installments. And those are typically due April 15th, June 15th for the second quarter. The third quarter is due on September 15th. And then the final quarter is actually due on January 15th of the following year. This year, because of COVID-19, the IRS has provided some relief. So they're extending everybody's deadline for both the quarter 1 and the quarter 2 payments to July 15th. So on July 15th, you can make both of those payments.
You mentioned the quarterly taxes being due in April, like April 15th. Is that payment due on that specific date, or is there a grace period around that?
No, there's no grace period. So it's due by that date. So if you're going to mail a check, it has to be postmarked by April 15th. You can send it in March if you'd like. So you can obviously send it in early and it's no problem. But if it's late, then what happens is the IRS imposes a small penalty that's essentially roughly interest on the amount of the payment that you're late. So if you miss that payment in April, let's say you accidentally send it in on April 20th, whatever portion was due prior to April 15th, on or before April 15th, the IRS will charge, right now it's like 3% annualized interest. So it's a very small penalty. On $1,000, you're looking at 3% of that divided by 4. That's what that would be. So it, would end up being a pretty small amount. So it's not a significant penalty. And I have a lot of clients that don't even bother paying estimated taxes because they
right. Yeah. I know a lot of people that don't even pay their estimates. They figure they'll just take the penalty at the end of the year just to be able to have that cash to fluctuate.
Yeah. Yeah. So a lot of my clients, what they'll do is we'll sit down and we'll kind of look at what their typical expenses are and what their typical income is. And we'll figure out, okay, based on this, you should take 20% of your gross income and set that aside for taxes. And what they'll do is they'll just put it in a savings account, and they'll, at the end of the year, they have that cash saved up to pay their tax bill. They're not actually doing the actual IRS estimated taxes, so they're not avoiding that penalty. But again, it's a small penalty, and I think they like the comfort of knowing that, hey, I have this cash here if there's an emergency.
Right. Okay, so now, what is the process to figure out that amount? Like, I know, I understand, or I'm learning to understand more so, because, I'm going through this process as well, and I'm learning every single day. Your income or your revenue, right? So how much your business is bringing in minus your expenses, how much money you're spending out to do your business leaves you with what?
So that's called your net income. So when you have net income, you start with your gross
revenue,
income.
Right? It's revenue, gross income or gross revenue.
Income, gross receipts, gross revenue. Those are all the same thing for most of the time.
Minus expenses equals your net. And then that net amount is what you are essentially paying your estimates based on. And if you're like I said, I'm learning all of this, so please correct me if I'm wrong. That amount, that net revenue, is then taxed at 15% because of self-employment taxes. And then wherever you fall, your family, your household, or if you're single, wherever you fall in that federal tax bracket, you also have to pay a percentage based on that net amount. So it's like these two things that you're being taxed on to pay your quarterly taxes.
Yeah, that's totally accurate. So when you're self-employed and you file Schedule C, or if you're a partnership, which is similar, partnership is a sole proprietorship of more than one owner, so it's treated very similarly tax-wise. So what happens is when you're a sole proprietorship, your job is what you're doing every day, right? But you're not getting a W-2 at the end of the year like you would if you worked for somebody. So when you get a W-2, you're actually paying that payroll tax, and your employer's paying half of it. So you pay half the payroll tax, your employer pays the other half. It's about 7.5% for the employee and about 7.5% for the employer. When you're self-employed, you're actually paying that full, both sides. So you're actually paying about 15%. And that's where that number comes from. For self-employment tax. So when you have that self-employment tax on a Schedule C, you're going to pay that first. So let's say you have $100,000 of income on your Schedule C. So your income minus your expenses was $100,000. That's your taxable income for self-employment tax. You're going to pay roughly, I'm rounding, but it's roughly 15%. So you're going to have about $15,000 in tax on that amount. And then you're going to have federal income tax on that amount as well. And there's some adjustments that we don't really need to get into because it's probably a little deeper than we need to. But you're going to pay federal income tax on top of that. So for example, a lot of my clients, projectionists, real estate agents, people that are paid, on 1099, a lot of times their spouse works and gets a W-2. So if your spouse works and gets a W-2 or has another source of income, your full amount of income is being subject at that higher income bracket already. So you're not getting the benefit of a standard deduction. In other words, if your spouse makes $50,000 and you make $50,000, well, your spouse kind of eats up that $24,000 standard deduction that everybody gets, and you're already at a higher tax bracket at the beginning of your income. So that's why it really takes careful tax planning for people that are self-employed. And that's why, a lot of people just think, oh, my tax bracket, they look up their tax bracket and say, oh, I'm in the 10% or 20 or 12% or 20% or whatever it is tax bracket. And they're basing all of their tax planning based on a very simple calculation. But as you can see, it's not simple. You might be in a higher federal tax bracket because your spouse also works. They also may not be taking into account that 15% self-employment tax. And that's where it's really necessary to have an expert.
Yeah, and I can definitely understand the benefits in that. Because I've had to learn over the years, and sometimes I've had to learn the hard way, where it's just like, here it comes April, and now I'm hit with this tax bill that I have to now figure out the money and find the money to pay for, and because I didn't properly plan throughout the rest of the year and set that money aside and understand how much was going to be owed. So, as I'm learning and growing, I'm definitely looking forward to doing this better and running my business better. So thank you for that. We do have a question from one of our viewers. It says, if I am single, with no children and not married, but I'm filing my taxes, do I file as single or head of household? And what's the difference?
The IRS has filing statuses that you can, depending on your circumstance, you fall into one of these filing statuses. So if you're single with no children, you're going to file single. Head of household is in order to qualify for head of household, you have to have a qualifying person that qualifies you, a qualifying dependent that qualifies you for head of household. So if you have no kids, if you have no dependents, then you would just file single. Okay. And what happens is depending on your filing status, that's going to impact which tax bracket you fall under. And that's going to impact how much your standard deduction is. And then there's also some other, depending on credits and things like that, that may change as well.
So Patrick, thank you so much for your time. We look forward to more conversations next week and just continuing to grow and educate the independent contractor. So thank you.
Yeah, thanks for having me, Clem. It's always fun to get on. Have a good long weekend.
Yeah. So as we previously stated, CLEMCO is here to help coach, lead, educate, and mentor independent contractors. We're going through this together. We're learning. We have resources. We have service providers that's here to help the independent contractor learn how to manage the independent contractor lifestyle better. So if you need any assistance, please reach out to us at www.CLEMCO.HR.com, and we look forward to speaking with you.